when I sit down on the weekends, whatever time I'm going to be doing my analysis, the market is not trading. All of my analysis is done when the market is not trading. What I'm trying to predict, to anticipate, not react to, what I'm trying to predict and or anticipate is where is the present weekly candle reaching for higher or lower prices. If I see an inefficiency like this, right here, that purple shaded area, I'm expecting price to try to draw down into that. If this inefficiency wasn't there, I would look for that low because that's where sell side would reside. Or consequent encroachment, which is the midpoint of this candle's tail. So it would be this. Let me make sure I have my cursor sitting here for a second before I start saying anything more. I would either look for that midpoint of that candle's tail, which is consequent encroachment, or I would use the low of that wick there. If, folks, listen, if there was no inefficiency that's shaded in purple, if that wasn't there, I would be expecting price to draw down. Now, why would I expect that? What makes me say that? Because we already hit our targets that I covered in the previous weeks. For those that weren't here, I was talking about how dollar was going to go higher, that we were going to use this shaded area here as an inversion fair value gap, and it would treat it as something bullish to trade up into the weekly order block, which is this opening price of this candle here. This candle's opening price, that's the weekly bearish order block. It was acting as a target. Then I said the mean threshold of that candle, which is the middle point of its body in here. That's the bearish order block mean threshold. That was also a target. So once it hit that, we wanted to see what's going to happen. Once a target's met, whether for the week or a day, you have to get comfortable, grow real comfortable with just simply sitting still.